Hi there, and welcome to Economic Observations. My name is Chris. Today is the 13th of February, and thank you so much for watching. This video is brought to you by the Tanzania School Foundation, a nonprofit near and dear to my heart. I hope you're enjoying your Sunday. It is cold and snowing here after a beautiful 60-degree Fahrenheit day yesterday. Okay, so there has been so much in the news and so much on YouTube regarding this emergency meeting by the Fed. People are saying they got to raise interest rates and they have to do all these things to rein in inflation. And that is not going to happen. You see, the Fed meets periodically all the time. They host these meetings, and it is just to develop strategy and to get everybody's insight. I know Bullock, one of the Fed members, has been very hawkish about raising rates and trying to get this under control, but Mary Daly was on Meet the Press this morning, and she is taking a more dovish turn, and so should it be. You know, one thing is for certain. The only thing that the Fed can really do is crash the economy, the stock market, and housing prices. Reining in inflation is going to be a huge challenge, and it may take 12 to 18 months for us to see the effects of it should they raise interest rates now. So it's not an instant fix, and I don't want people to get hung up thinking that they can have a magic wand and instantly have inflation go away. One of the largest influences for inflation today is energy, and it is a global problem. In the UK, people are having a hard time heating their homes. In Africa, they can barely afford to eat because everything is grown and they need fertilizer, and the fertilizer needs energy to be created, and that is causing a big problem. And in the United States, they say, well, energy is a huge factor because things are getting back on track. People are driving, people are flying, truck drivers are driving, and there is a strong demand for it, and well, just not enough output. But we do know for sure that the Fed is meeting tomorrow. I don't think we're going to know anything. I don't think we should be expecting any big announcements. See, before they raise interest rates, they have to end the money printing. They have to end the purchasing of assets, the QE. And we know that the Fed has told us that effective March 1st, is going to be the last injection of QE, and they are going to withdraw that support from the economy. They need to see what's going to happen after they do that before interest rates rise. So March 10th is a big day because it's also the day the CPI data comes out. So I think people will be waiting with bated breath to see the consumer price index, and as well as what's going to happen when the Fed reduces its injection of money. March 4th is the labor data comes out, and people will be keen on seeing that. I think the markets are going to stabilize a little bit until March 10th. The Fed is very concerned about collapsing everything at once, and they have to do this so gingerly with a fine-tooth comb, because any mismovement, even the slightest, can send everything tumbling, and they don't want that to happen. I also believe that energy prices come the summer after the winter in most of the developed world, that the demand will shrink because people won't be heating their homes. Sure, they might be driving a little bit further, they might be flying a little bit further, but I believe a lot of it is contingent on the need of heat and energy in those other sectors, just for living. So with the potential of the ending of QE and the rising of interest rates, markets can be volatile, and if you have debt, it can be a huge problem. Credit card debt in the United States is exorbitant. People bought homes at all-time highs. People invested in the stock market at all-time highs. And if we see the potential of the volatility that I think is coming, hold on tight. Those dates are something to keep an eye out. March 10th. Let's see what happens when the Fed fully stops the purchase buying. I mean, they had started at 120 billion a month. They are now down to 30 billion a month, and it hasn't affected markets too much. But when is too much too much? We'll just wait and see. I think we are going into a awkward time in history, and like I said, the one slightest move can have a domino effect and just disrupt life as we know it. They meet again on March 15th. They may take a month or two to see what the ramifications of the withdrawal of the asset purchasing are before interest rates rise. All right, thanks again for watching. As always, I appreciate you. Be kind. Call someone, tell them you love them. We'll talk again real soon. As always, thanks for watching. Please smash the like button and hit subscribe, and we will talk again real soon. Have a great night.